Morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592, the website at allamericangold.com. And I know everybody's concerned. Pelosi has landed in Taiwan, being escorted in with the Taiwanese fighter jets, but she has made it to Taiwan. And, well, let's just say the Chinese aren't happy, but just throw that on there. I mean, the more aggressive, more posturing going on already all over the world, you know, Russia, Ukraine. This kind of feels like the same thing. Hey, let's just keep poking the bear and see what happens. And usually what happens is nothing good. We've got Jay Powell saying, hey, the economy's slowing, but we're raising rates. And now a lot of people are thinking he's going to be backing off rate hikes. Some people think he's not going to be backing off rate hikes. Stock market's up, stock market's down. Gold continues to rally. It is an absolute minefield out there. Nobody knows what to do, Jason.
Sure sets up the plate really easy for you have a housing crash actually happening in China. Their economy is getting ready to have a huge problem. Our economy has a huge problem. So of course you send Nancy at that time to China. A war starts off in Taiwan here in the next few months, and you got Russia still. And then when everything crashes and burns, well, it's the Chinese and the Russians starting wars. So that might be what they're setting us up for, Joe. Economy crashes. It's the war's fault.
Well, you know what? We're joined. We bring him on. We try to bring him on about once a month here. My son Joey is with us from Northwestern Mutual because we're talking about, hey, keep your money safe, right? This is the time. We know the bubble is bursted here, right? They created all of this money, used COVID as a cover to print into oblivion, and now they're trying to soak that money up, and nobody knows. One guy, oh, the bottom's in. The other guy, oh, it's getting ready to crash. The biggest thing is keeping your money safe, and obviously gold and silver are a big part of that. And then Joey and his buddies over at Northwestern Mutual can help you with the rest. Joey, you wanted to talk about things where you can get guaranteed returns that have nothing to do with the market. The market could rally back to new all-time highs. It could crash back to new all-time lows. We could have war with China and Taiwan, and none of it would matter. The money is safe. Tell us all about it.
Yeah. So previously I've come on and I've talked about life insurance, which does the same thing, but something I haven't touched on the show yet is annuities. And with most of these listeners, being older in their 50s and 60s, annuities are a great way to lock in some safe money with guaranteed money to grow. And like you said, if we started World War III tomorrow, you would still have your guaranteed money making around 4 to 5% on it, risk-free, which is amazing. And the way these annuities work is pretty interesting. If you're nearing retirement, let's say you've got 5 years until you enter retirement, or 2 years, or even 1, there's things called single premium annuity, which you pay a lump sum money up front. The minimum amount of money you need to do something like this is $25,000. And what this does, it allows you to get paid for X amount of years during retirement monthly, making sure that you're getting an income stream while you're not working, and then your money's also growing at around 4 to 5%. And like I said, it's all risk-free. Nancy Pelosi, she can do whatever she wants, and your money's still going to be safe. And I think it's just something that's invaluable, especially at times like these.
And it provides people some opportunity maybe to ride this market out for a little while, right? Hey, you know what? I'm gonna ride this out here. I don't know what's gonna happen. It's too uncertain. And still, like you said, hey, still gonna get 4 or 5% and not have to worry. You don't have to worry about tomorrow. What comments did Jay Powell make, or what did Joe Biden say, or what country did Nancy Pelosi go to? Is there a maximum amount? I mean, does the government limit how much you can do? I know you got the minimum is $25,000. Is there a maximum?
Yeah, the maximum is probably like $1 million, which is, it's a huge number. If people listening have that kind of money and they want to put more in, there are things we can do and people we call to see if it's okay. But it's from $25,000 all the way up to $1 million. And we're just making sure that we show you how this annuity works, how you'll get paid out monthly. Hey, do we want to put in a lump sum year one and then put in whatever premium it is per month for another year to let it grow even more? We can do that. How much money do we want per month is basically the question that we will ask. And then depending on that is how much we're going to have to put in for a lump sum for this. But, the great thing is you don't have to, if you're watching Fox News, wherever you're watching or listening to, you don't even have to worry about that. You'll know your money's safe. It gives you a lot of time for you to ride out these bad times in the market and let all of your accounts recover. I'd be lying to you if I told you I knew what was going to happen. I don't know. Nobody knows. If they are telling you that, you should probably run for the hills.
Right, yeah, right. Like I said, what? It changes, right? 1 minute they're at the bottom, next minute the bottom's in, and then a month later everybody's panicked once again. But the biggest thing is safety here, right? It doesn't matter. Jay Powell could raise rates to 10%. And they'd still be fine. He could go back to zero. They're still guaranteed it. Wars, no wars. It's all guaranteed. We'll be right back with more with Joey at Northwestern Mutual. Stick with us. 800-951-0592. Joe and Jason, we got Joey with us here this morning. Gold's up 8, 1780. Silver's actually down a little bit here, down about 10 cents. The Dow's down a couple hundred points as Nancy Pelosi has arrived in Taiwan. And early this morning, another flood into the bond market, people running for cover. Jason and I have been talking a lot about how the 10-year note is barely yielding more than the Fed's funds rate. And think about this right now. The government only going to pay you 2.6% to lend them money for 10 years. Joey's talking about these options where you're going to get, close to 5%, and it's guaranteed no matter what happens. And Joey, would this be for people that maybe they've got, hey, I've got more money in my bank account than I need. I've got, 200,000, 300,000, 400,000 in the bank, 50,000 in the bank. Really not earning anything. They can give you a call. You can talk to them about these programs, and then their money can start working for them. And it's not like their money's locked up for 10 years, right?
Yeah, exactly. That's very true. It's not like your money's absolutely locked up for those whole 10 years. For annuities, you'll be getting paid out monthly depending on how we set it up. For life insurance, you'll build up a cash value that you'll be able to withdraw from. Now, with that being said, you put in like 200,000. Let's just say a number. You're not going to be able to withdraw that 200,000. The first 5 years. You need to let the money grow a little bit, and then we can take it out as we go. But also, we would never recommend to put your whole bank account into one of these. We would recommend maybe half, maybe a quarter to play it safe. But you mentioned earlier how Jay Powell is raising rates, which effectively is going to negatively affect the earnings, and the stock prices will go down. But for our Northwestern Mutual policyholders, raising rates is a good news because that means our dividend will go up. Currently at 5%. Next year, probably be around 5.2, 5.3% with these rates going up. Safe money right now is looking great at Northwestern Mutual. These annuities, these life insurance products, there's so many different things we can talk about and do. But honestly, it all depends on your time horizon, where you're at in life, what does your budget look like, what do you want to do with the money. And there's just so many different scenarios, so many different things we can do and plan to set this up. But in reality, we just need to have a conversation, see what's going on, and then we'll recommend some things we could be doing to make sure that our money is safe and we're preserving our wealth in retirement. The last thing we want to do is lose the money we worked our butts off for.
Right, and, you brought up, different things. You like to talk about different buckets of money. All of our clients, all of our listeners, they have gold. They can sell gold in their retirement to do certain things. But it's always great to have other buckets of money because it may be, hey, gold's down right now. I'm going to hold on to my gold. I'll use the money in my annuity this time around, or maybe the stock market's down, right? Hey, you know what? I'm going to hold off on that, and I'm gonna get a different bucket of money because that's something in retirement. It's always good to have different options, right? Because you hate to, when you need the money, you hate to take it from a bucket that maybe's at a low point.
Yeah, exactly. And these safe assets are, I like to say, the hedge against everything. It's backed by Northwestern Mutual. We have over $500 billion in assets. We have the more cash on hand than any other financial firm there is. Been around for 170 years. Like I mentioned before, so we were AAA rated, but now the government got down to AA, so we're AA now as well because we can't be better than them. But yeah, I would just say this is as safe as it gets, and it's as guaranteed as it gets. And also for people who like to get risky, we can tie these safe assets to the market if you wanted to do so. Now, I would not recommend that if you're entering retirement, but if you're a younger person, we could tie an annuity to the market. We could tie life insurance to the market and make it grow faster and stronger. However, if you already have market-tied assets, I think the safe play here is to use a safe money asset and let Northwestern Mutual's reputation grow your money safely for you. I think now is the greatest time as ever to explore these options, especially entering retirement. Annuities are a great way to catch up on that. Life insurance usually takes 10 to 15 years to build up a good cash value, but with annuities, you could pay one lump sum now, and you'll be getting paid out next year monthly during your retirement. So there's a ton of things we can be doing. We have a lot of strategic plans in place. We just have to have the conversation in order to do so. And you can always reach me at my personal cell phone number. That's 602-909-9048. Again, that's 602-909-9048. And my business card is also on the website as well if you wanted to get it there.
Yeah, 1360khnc.com. Go to the sponsor page. You get Joey's information there as well. And again, you know what? I always forget. The dividend at Northwestern Mutual is just, it's insane when you think about it. And the fact of the matter is, with Jay Powell raising rates, you get rewarded even more for it as well. So that's always the thing that, you got to think about these things, right? Because, hey, when you're talking a dividend of 5.5, if Jay Powell keeps raising rates 6%, that's a lot of money.
It is a lot of money, and it's a lot of money, especially for zero risk, right? What I'm having a lot of my clients do, they have some money invested into bonds. We're kind of we're just erasing the bonds in their portfolio, and we're changing that into either life insurance or annuities. Rates are going up. The bonds are getting crushed. We're making sure that we're getting safe money, and we're actually growing at a higher rate than bonds and things like that do at 5%. So it's we're being very strategic right now with our clients, and we're really setting them up to be risk-free during these crazy times in the market, but also making sure we do have some money in the market to collect on these fire sales that are happening right now. It's all about proper planning and just conversation.
Yeah, exactly right. And there's going to be opportunities, right? Always when the markets go into these periods, we always say it all the time, right? The being able to capitalize at those times. And that's why they have a financial advisor like you looking out for them and letting them know, hey, it's time. It's time to maybe start nibbling here and checking some of these things out. And really taking advantage of all the things that Northwestern Mutual does, and obviously in a safe way, because you are a fiduciary. Explain that to people a little bit.
Yeah, so as a fiduciary, I'm legally obligated to do what is in your best interest. If I don't, I can be in big trouble. And also, to go based off of that, the better my clients do, the better I do as well. so I have to help you guys out. I need to do what's right, and it is the right thing to do. And as a fiduciary, everything we talk about in our meetings, everything you tell me, will not be shared with anyone else. That is confidential information, and I take that very seriously. I make sure all my clients are protected, and whatever we talk about is not talked about with other people. And as a fiduciary, I'm always going to do what's best for you, because at the end of the day, what's best for you is what's best for me.
Yeah, he doesn't even tell me, so that just tells you where it's at there, and it's a thing that you guys have access to all products, not just Northwestern Mutual products, as you actually provide most of the products for everybody else. But you're going to make sure whatever it is, it's in their best interest from a tax standpoint, from a personal standpoint. You're going to make sure from top to bottom this is the best plan for them.
Yeah, exactly. You know, we can, as a Northwestern Mutual rep, I can access NM products, which no other advisors can if they're not affiliated with us. Can also access any other insurance product on the market and do some shopping for you. One thing I will say is I've done a lot of shopping at other companies. Nothing quite compares to the policies at Northwestern Mutual. However, sometimes people may have health concerns. They may be a smoker. They may do this and that. That's the case where we'll go to outside insurance services to get you a product that's cheaper and that'll insure you. But the things we do at Northwestern Mutual, we do almost everything. We're always looking into things. And even if we can't do certain things with you, we are very well connected with other people, and we'll make sure to put you in touch with the right people. We're always all about helping people, even if we don't get paid. That's not why we're doing this. We're doing this to create a community that's financially independent, and, you know, we can grow together as well.
Joey, give out your contact information. I know you got a meeting to head into. Tell everyone one more time how they can reach you.
Yeah, so just reach me at my personal cell. My number is 602-909-9048. Again, that's 602-909-9048. And if I happen to not answer, just leave me a voicemail or shoot me a text message, and I'll get back to you as soon as I can. Or you can go on to the KHNC website. My business card is on there, and you can contact me to that information as well.
Joey, thanks for joining us. We'll talk again to you really soon.
All right, thank you, guys. Have a good one.
Hey, that was my son Joey at Northwestern Mutual. I didn't want to bring it up on the air, but he got promoted last week, and I don't know if it's a good thing or not, Jason. He got put in charge of all the interns, so he's a glorified babysitter on top of what he does.
Oh no! Well, yeah, I guess he's.
Yeah, they're like, "Hey, you're so good at this. Hey, take these interns."
He's in charge of picking out where the real talent is and who to bring up. I guess he gets the winners and losers. You know,
that's probably exactly what it is. So always another great resource. Listen, we know we always highlight problems, right, and bring up let's lift up the curtain. There's some bad things here you got to work at. We love providing solutions to it as well. Gold and silver is a part of it. It's not the whole part. And that's why it's so great now. We got someone like Joey, and listen, he's a really smart kid, but he's at Northwestern Mutual for a reason, because it's one of these places. They're kind of like the old anti-establishment guard, right? You don't hear about Northwestern Mutual very much when it's Goldman Sachs and J.P. Morgan and all these pinstripe bandits. Northwestern Mutual is kind of the opposite of that and kind of aligns with his core values. So if you've got money sitting in, especially if you've got it sitting in that bank, give him a call because, I mean, you think about it, you get 4 or 5% guaranteed return, and then they throw a 5% dividend on top. Jason, you're almost keeping up with inflation.
Yeah, there's lots of ways to get it to work, Joe. So this is a good option for a lot of people out there to take advantage of.
So when we get back, we got to get into the markets. Nancy Pelosi, the plane has landed, but we got jobs data out. Another big openings. I think it was the third biggest decline on record. And then something really interesting happening in the warehousing sector. Amazon bailing out of warehouse projects across the country. And then very interesting, and Jason, something that you've been bringing up, all of these retailers ordered way too much stuff. And so, like in the Inland Empire in California, everybody's trying to lease out space, Jason, because they got nowhere to store products. That does not bode well for what the GDP is going to look like 3 and 6 months from now, right? Because obviously if they've ordered too much stuff, that means they're going to order less stuff in the future. But a big news out of Amazon saying that they are stopping projects, total of 40 total warehouses in 12 states, Jason, just dead stop at Amazon.
Yeah, I kind of get the feeling that they're forming a new, I guess, modern warehouse system, Joe, because they're building a bunch of warehouses in California, but then they're burning them down, warehouses for Walmart and Indiana and other places, and suddenly Amazon's slowing down. So has the feel that something's being built, right?
Yeah, it's funny you bring that up. We'll talk a little bit more about the warehouse in California. 800-951-0592, Patriot Radio News Hour, Joe and Jason here. And Jason, you brought up this really hard situation. So the Inland Empire, everyone out in the West, we know the Inland Empire. This is nothing. It really, let's just call it warehouse capital of the world. You got the ports right there, the LA ports, the Long Beach ports. All this stuff kind of gets staged in the Inland Empire, and essentially they're like, there's no warehouse left. Everybody, all of these retailers have ordered too much stuff. There's no place to put it. And then at the same time, Amazon has confirmed with the USA Today that so far this year, they've canceled, closed, listed for sublease, or put on hold more than 25 delivery stations and fulfillment centers across the United States, and they delayed opening on 15 more of them, Jason. So it's kind of this weird thing where, we got way too much warehouse space everywhere, but right where the port is. Because where the port is every major retailer is just holding product there.
Right, Joe. I mean, something that we haven't talked about as much. It's just funny how some things make the news cycle and then they sort of phase out, even though it's still there. Which is the ships that are sitting out there. Just they can't get them unloaded, right? We were talking about shortages, but there were ships sitting there unloaded, right? So now, here it is, Joe, we're talking about how all the stores are full. All the Walmarts are chock full, all these warehouses, all these big box stores. I talked to a lot of local businesses that are maybe medium-sized. They're all full of stuff. There is no shortages. So why do I get the feeling, and Joe, I'm not going to go deep into it, but I had mentioned bullwhip, but we might have booms and crashes at a frightfully quick snap in the future. We may see yearly or every 2 year, maybe one of these run-ups in the economy and then a crash, and then and it's because the supply lines, I think it's going to be a lot of trauma. So I see, Joe, why not build a bunch of warehouses? Because we don't want to waste all this stuff, because we may have a huge buying spree when things get good. We don't want to catch ourselves unprepared for these up and downs in the economy that are coming up. Why do I have the feeling these guys know there's going to be these massive ups and downs in the future? And so they have to have warehouses to store stuff in because, well, it'll sell sometime, right, Joe? At some point.
Eventually, right.
At some point it'll sell. That's what I'm thinking, Joe. I'm thinking, why did they have such a huge amount of stuff sitting in ships not getting unloaded? I think they know what's coming. I think the planners of this thing know what's happening, and they know, well, here's our, they'll have a plan. Here's our plan. So let's just unload this stuff into some new warehouses, just chock full of everything, just fill up everything we possibly can. And then when things turn a different direction, we'll have it ready to go. The supply lines will be fixed. We won't have to have ships out in the ocean. That's me, Joe. I think they know what's happening. and they don't, you don't just dump it in the ocean, right, Joe? You already paid for this stuff. Got to get someone to buy it, right?
Yeah, unless it's produce, right? Unless it's perishable, just stack it and store it, and that's kind of what's happening. And then it's funny to see Amazon. They're kind of like the big retailer out there that pushes all this stuff, saying, "Hey, you know what? We're just going to store it in California. Let's cancel all these other projects because the consumer. This is quick. This is how quick. I mean, to Jason's point, he calls it bullwhip, where all of a sudden things just turn on a dime, and it goes in both directions, right? It's off, it's on, it's off, it's on, it's off, it's on. Could very well be. Speaking of off, German retail sales, and again, we need to pay attention because I really think the crisis in the banks is most likely going to be in these European banks. Germany's retail sales, the biggest drop on record. This includes when Germany shut down, right, Jason? They're talking about retail sales unadjusted falling 10%, not year over year, month over month.
Yeah, no, that's absolutely happening, Joe. That is happening all around us. And, these warehouses that are full, let me just add one more point. We all know that, that inflation's bad. You might as well buy it now because tomorrow it's more expensive, right? Well, it seems to me, just straight from the Fed, I mentioned that the New York Fed had talked about 6.8 would be the June inflation year-over-year number for June in June 2023. So if inflation is going to continue to do that for years, let's say, then why not fill up your warehouses full of stuff today so you can sell it for a better price tomorrow, right, Joe? So that all this makes sense. Doesn't it all make sense?
And again, you think about depending on where these products are coming from, you may know, hey, guess what? Oh, that comes from Germany. Let's stack it up, right? Let's stack it up now because come 2023, 2024, everything coming out of Germany is going to be double or triple the price. It could very well be.
And a lot of companies might not be able to make anything by next year. They may be just gone. So let's get the stuff they've got now because a lot of these places are going to be crushed and gone. So we'll have the goods here for whatever rebalances in the future. And I'll tell you, with Amazon not building warehouses, that doesn't make a lot of sense, but maybe this is modernization, Joe. Maybe these warehouses weren't exactly where they're headed now for these robotic warehouses. Maybe they had half of them were going to be robotic warehouses, half of them were going to be normal ones. It's like, well, you know what? We just can't afford the labor. Let's just
they don't give details. I'd love to know where it is. They're not building them.
Yeah, that's
where it is, right? That's the point. That's what we didn't see. Very, very interesting. Listen, there's news breaking out of Barclays Bank. And again, they had a disastrous earnings season. We talked about Credit Suisse. Back in March, Barclays suspended any sales from their exchange-traded funds in dealing with the VIX, oil, and a whole bunch of other exchange-traded funds. Now, it's interesting because it's being reported that Barclays may have been, there you go, this shouldn't be a shock to anybody, screwing the people that were buying these exchange-traded funds and essentially putting losses onto their own clients. And now it's being reported that Barclays is now going to have to refund $16 billion, as much as $16 billion of this, Jason. And again, that's a complete wipeout of Barclays. We'll talk more about that when we return. 800-951-0592. Barclays now saying that they are suspending their share buybacks. Okay, this is something we saw J.P. Morgan do. Let me just give you some cliff notes here. Barclays sold more exchange-traded funds, what they called structured notes, than what they were allowed to legally sell. I don't know how you do this. Analysts are saying that the error at Barclays. They're like, this is bizarre, embarrassing, and very basic. The rules here and how Barclays could have made such an error. So what happened is everybody that bought these had a right of rescission because Barclays illegally sold them. And essentially, Jason, everyone took the right of rescission because not only did Barclays have to reimburse them 100%, they had to also throw interest and penalties. The rescissions, they made like 1,200% on the investment due to the error from Barclays, and they're now saying that this could cause, think about it, they sold $17 billion more than they were allowed to sell. I mean, it's hard to imagine. It's going to cost Barclays just in second quarter losses that are going to reach in excess of $1 billion on top of having to make all these investors whole again. And they have now announced that they are halting all share buybacks, and they're suspending the sales and issuance of dozens of other exchange-traded notes. So, Jason, this could get a lot uglier before it gets better.
Remember when people used to get in trouble for doing bad stuff like that? People actually go to maybe even get prosecuted and go to jail for crooked business situations. Would it be nice if we lived in that day and age when people actually were held responsible for doing dumb things? But
I don't know. But I'm sitting there going, how is this possible?
Somebody wanted a big piece.
I could understand. Oh, you know what? We made a little mistake, and we sold. Not that I could understand, but it was $1 million more, or they sold $17 billion worth of stuff that they weren't allowed to sell.
Yeah, crooked, Joe.
How do you make a mistake like that?
Oh, that was not a mistake. That was on purpose.
Well, you know what? It leads me to believe what was going on at Barclays that they decided, we need this $17 billion now, and we'll worry about the fine later. That's a great point.
Yeah, these guys do these things because they want to do these things, or maybe you're right. It's possible that they're in some sort of a corner. It's like, well, this is one way out, and maybe the penalty on this other thing is a lot less than if we let this other thing crash on us. But these are
well, it's very interesting when I'm going through these filings. It looks like this was going on in 2019. That was right when we were having that bond tantrum. Remember, that was when we stopped the last time we were trying to do quantitative tightening. And then all of a sudden, COVID comes. The banks get all this money to recapitalize, and Barclays was just like, you know what? It'll be worth it. We'll lose $1 billion. We need the money now, and we'll get bailed out later. Maybe that was what was happening, but now the suspension of share buybacks just tells you right now that there's a cash crunch happening at Barclays.
It's like that character from Popeye, Wimpy, right? I'll gladly pay you Wednesday for a hamburger today. I mean, that's pretty much it, right, Joe? Hey, we'll sell this stuff right now, and somehow, in their minds, that's kind of what crooks think, or guys that do a lot of stealing. We'll figure out a way to pay it back. We'll figure it out, Joe. It'll happen. There's so much loose money out here. It'll come back, right, Joe? They probably figure they'll get it back.
They'll get it back. Don't worry. And of course, right on the heels, J.P. Morgan. A bunch of bankers getting ready to pay the price for the manipulation of the gold markets. This is in the hands of the jury, but it's pretty cut and dry. J.P. Morgan profited by hundreds of millions of dollars for years, for over a decade, in ripping off clients in what they were spoofing the gold markets, the precious metals markets. It really is, to Jason's point, when are we going to see law and order? You know what? If they wanted all of this nonsense to stop, it would stop, right? You put Jamie Dimon in handcuffs, and this kind of stuff stops. They don't do that. They get some junior bankers to take the fall. You want the stuff at the border stopped? It would stop tomorrow if they wanted it stopped, right, Jason?
That's right, Joe. If something wants to be done by the powers that be, it gets done. They don't do these things on accident. They think these things through, and then they make a decision and do it. It's not like some random guy just cooked up some scheme and was able to go undetected inside the J.P. Morgan and made this whole thing happen. No, there's a whole bunch of people that made decisions, and the guys that make decisions don't get in trouble because what? They made corporations people. So you can punish the corporation, you can convict the corporation, but nobody goes to jail. The guys that actually made the decisions, they're off. You know, as long as they can handle it with the financial part, with funny money, Joe, nobody gets in trouble. This is what makes this system so crooked and so bad. This is why we're on the air selling gold. Yeah,
exactly right. Gold near the highs of the day here, up over $10 here. 1782, and then the big 3 days are coming up tomorrow, Thursday, Friday. We're going to talk about that final segment coming up. 800-951-0592, $20 gold, $22.25, 800-951-0592. So far, anyway, playing out pretty much like I expected. The bottom's in, gold's been rallying, and tomorrow, Thursday, Friday, depending on what the numbers look like, we could see gold well above 1,800 again, back in positive territory for the year. It's going to be all about jobs. So tomorrow we'll get ADP. That's the private sector jobs number. This number's been pretty bad for the last 2 months. I'm expecting more of the same. I would say, Jason, of the three, this probably is the least important that we're going to get tomorrow. Thursday, we're going to get jobless claims. Jobless claims have, and I don't know if it's 8, 9, 10 weeks in a row, jobless claims keep rising. You know, everyone's higher than the next. Again, we're watching that 270,000 range. Once we break above that, it gets a little scary. Last week, we were at 256,000. That was a new high point. So we'll watch there. It's been growing between 4 and 10,000 a week. So if we get 14,000, we could see that 270 number. Again, that would cause a rise in gold. And then obviously the jobs number on Friday, right now, 250 seems to be kind of the consensus number. If the number's, around 200,000, gold's going higher. And Jason, if we have a big fallout and just say all of a sudden the number drops to maybe only 100,000, we could see gold significantly higher.
Yeah, I think the Friday numbers are going to be lower for sure, Joe. And you remember, during coronavirus, how many weeks in a row was those jobless claims on Thursdays above 600,000? I mean, remember how many weeks in a row it was huge numbers, like astronomical numbers. And I don't think things like that get fixed in 2 years, Joe. I think that's where we're at today. These things got blown up big time.
Yeah, and it's just a big hodgepodge of a mess here. I know more layoffs, Lyft, Oracle, right? A lot of the tech companies continuing to announce layoffs. Obviously, USA Today, news about Amazon doesn't look like their hiring plans are what they used to be as well. So we'll see where it's at. Obviously, I think not gone. The $1 million a month job prints are gone. The $500,000 job those prints are gone now. The question really is how far below 300,000 do we get? Is it 200,000? Is it 100,000? And the lower that number is, the higher gold goes. There's a very good chance we can be talking about gold sitting around 1,800. Right now it's 1782, around 1,800 on Friday, waiting for that news. And if it comes in where I think it's going to be, which is somewhere close to 2,000, maybe 175 to 225. We could see gold well over $1,800 by Friday. So still, buy them here. $20 gold pieces, $22.25. Don't touch that dial.